Am I right? What's up, guys? The big news is Tesla. Tesla is up a ton today. Guys, yesterday before we recorded a video, Tim said, what do you think is going to happen if Tesla misses on both earnings and revenue? I said, I think it's going to plummet. Well, it missed on both earnings and revenue. Proves you have no idea what's going to happen in the market. This thing's up 12.5%. For missing on revenue and profit. Profit was down 48%. This is our new channel. As you all know, on our main channel, Everything Money, we just released a video this morning on a more detailed analysis of Tesla. Already have the Tesla fanboys coming at me. One guy even wrote, this guy's been wrong on Tesla since every single time. And I'm like, really? Because I remember over here saying it's a pretty stupid investment. But I guess going from 415 down to 163. Now, granted, before then, obviously back here when I said it was overvalued, it didn't really work out well. But my goal is to sit there and say every investment is the present value of all future cash flow. And the future cash flow being, oh, and by the way, Elon Musk said that you need to value Tesla as an AI company, AI robotic company, not a car company. So I saw an article from late last year suggesting that Tesla's FSD could be upwards of $75 billion a year in 2030. If that happens, it's still like 20% of revenue, but it could be the majority of the profit. So, hey, Tesla could be a tech company, and I've never denied that. I'm just saying right now it is not a tech company. And I don't think you can value it as a tech company until tech becomes the major driver of its revenue or profit. All right? That's just, I'm not even making an opinion. I'm just there's stating a fact that you can't call a piece of wood a table until it becomes a table. You cannot call a high school prospect a pro athlete until they become a pro athlete. Do they have the potential for it? Absolutely. And should you factor in that potential in the future for Tesla? Absolutely. But you got to assign a probability to that. What are the chances they do generate $75 billion in the next 5 years? And even then, guys, what's the margin on that? If anybody could tell me what the margin is on that, I'd really appreciate it, because Tesla can't even tell me what it is. What's the margin on that FSD and software? We don't know. We don't have a clue. When Amazon created AWS, we knew what the margins were. We're like, okay, this is the gross margin on this. Great, let's go run with that. We don't know that on FSD. And Professor Aswath from NYU, who we entered on the channel, he likes Tesla sub 180. More power to him. He's a very smart man. I definitely respect his opinion immensely. So, what do we else we got here? Let's see what's going on. Oh, a lot of comments. I don't get it. And by the way, Rocket Mike, you're being funny. I don't get it. You're 100% right. I do not get it. I really don't understand that. And that's okay for me. But I'd rather be the more rational. Now, again, going back to this, if the potential for Tesla is $75 billion in 2030 and you sit there and say it's a 20% chance of hitting that, don't value it at $75 billion. You got to value it on $15 billion and then bring it back to 2024. That's the point. That's what the proper mathematics are for investing in a company. I do think Tesla has the potential for being something more than a car company. It's funny because people will hear my stodgy, like, oh no, it's not a car. I say it's not a tech company yet. It could very well be one, and that should be factored in. And that's what I love about Professor Aswath, right? Dalton, yeah. He sits there and takes the spectrum, which is what we do in our stock analyzer tool. You take a low, middle, and high assumption on what it could be. With Tesla, I had to think the range of outcomes is this wide versus Microsoft might be this wide.
There's a lot of optionality there. And it's the same thing kind of like with Meta, with all the stuff they have going for them. It's like, it's hard to value, but that's where I suppose if you have a big enough margin of safety, or if it's obvious enough, you don't really have to get it 100%, right?
Yeah.
So
it's not, it's exactly, it's the whole idea of, we're not here at the example I always heard was, we're not here at the carnival trying to guess somebody's exact age within 2 years. You're just trying to say, are they old or are they young? That's it. And with Tesla, when I value it in the video, I sat there and said, it's not obvious enough to me. Where I go, I want to buy it today based on car company metrics with the software being the cream. But if you buy it today, in my opinion, at 163, I think you need the software to really work out. And that's too hard. For me, that's too hard for me to do. That could very well be easy for you. That could be easy for a lot of people. That's easy for Kathy Wood. But for me, I look at it going, I don't know. I'd rather pay more for Tesla, but know what I'm buying, than pay less on the hope. That's what's important to me.
Yeah, if you can get the software stuff for free and buy it based off a reasonable discount to the car business itself, I mean, that's a free call option basically on the...
Right. Rocket Mike, I knew you were joking. I'm calm. That's funny. Oh, wow. Look at that. Singapore. That's pretty cool. Yeah. Copart is a great business.
Friend of the channel, Hunter Bagger's author owns that.
So anyhow, guys, I love the fact that our 24/7 channel is doing so well. It is growing like crazy. It's already almost at 5,000 subscribers. And it's, I want to get rid of this. Oh, here's how we do that. There. No. How do I get it so that, I see that's a thing. I don't, oh, there it is. Boom. I think to myself, whenever you have a company, like look, for example, my company. My company, we have 8 companies upstairs. 4 of them are really good drivers of value. The other 4, we tried to make them something that drove value. It didn't happen, but they're profitable. We love our partners, run them, and we get a small dividend every year. Fine by me. But my main focus is those four companies. Now, Everything Money is one of them. Everything Money has the potential for being the number 1 company in there, but right now it's not. But is it possible? Sure, but I got to go through a lot of hurdles. You have to factor that potential growth in there, just like you have to factor the real estate growth, the luxury home market growth, the property restoration business. Those 4 companies make up our main 4 companies. Which one's going to be the number 1 driver of revenue in 10 years? I think I know. I think it's going to be the real estate. But Everything Money is growing very, very well. So maybe it's Everything Money. So are we a real estate business? Are we? That's just all I'm saying. It's a component. And to say it's only real estate is not true. To say it's only Everything Money and a software business is not true. It's a combination of both. But I find that people attach themselves to the most exciting potential outcome and say, this is it. And just sitting there saying, you got to be cautious with that. You can't sit there. I do believe Tesla will have a tech component and it'll be awesome. The question is, why are they not disclosing their revenue on these? Like, I'm still waiting for somebody to tell me, here is the exact revenue on FSD. Yeah. It's still in beta mode. I know that, but how many people have actually signed up for it? Go ahead.
The other part that's important too is Elon's talked before about like, he wants to make an affordable car that everyone can drive, because the whole idea is adopting electric vehicles, lower emissions, yada, yada. But you talk about, say, a $30,000 car. If you're paying $8,000 for the FSD in the beginning plus $100 a month, that's another almost $10,000.
Is it both, or is it just one or the other?
It's both. It's a straight up cost, and then it's also a monthly subscription. So that's $10,000 a year, or $10,000 in total, and then a yearly $99 a month every year after. I mean, that
yeah, but self-driving is pretty awesome.
Yeah, it is.
And by the way, let's announce that Nick got the Everything Money shoes from Nike. There were some shoes going on at Nike that were on, and he had his mother on. Can we get this?
Didn't get them, but I did.
Oh, you got them.
Yeah.
Can we further back?
Actually, put it to the screen.
How do I do to the screen?
I mean, like,
what?
Yeah.
So he got these. Got them. Look at these things. They're Everything Money colors, so he got them. I'm doing awesome, Hiron. How are you doing? Oh, FSD is available for $99 a month. You don't have to pay an upfront fee for that.
In the timeout, let me look at the price.
I thought that was correct. I thought Rob was right on that one, but I could be wrong. But I still want to know, Rob, what is the revenue on that? I have no idea. What's the total revenue they're generating right now from it? In fact, the article I read from November said it could be 1 to 3 billion right now. And I'm like, how do we not know? How are they not announcing it? Especially Elon. Anyways, everybody takes what I'm saying as saying I'm criticizing Tesla. I'm not criticizing Tesla. I'm criticizing investors. That's all I'm doing. I'm sitting there saying, don't assume that the amazing high school prospect is going to be the number 1 player in the NBA, Major League Baseball. Don't assume that. There's a long way to go. Remember, Tiger Woods in the first 14 years of his career won 14 majors. And Jack Nicklaus said, before we give him the title having the most majors ever, let's let him get there. And guess what? In the last 15 years, he's gotten one major. That's my prime example. It was so obvious he was going to hit that. And then other things happened. That's the point. Other things happen in the economy. Other things happen in business. Anything. Look, I look at right now, my brother just came to me. We're buying a big property in Kentucky, big apartment building, 200 units. He just came to me and said, these financing offers are garbage. Guys, a year ago, people were throwing money at us at even higher rate, throwing money on deals we didn't even like. Now we find a deal we like and the financing's hard. How much 1 year difference makes? Just 1 year. 1 year difference. That's all I'm saying. Anything can happen. And if you're going to be a good investor, you have to sit there and calmly say, all right, is Tesla more than a car company? Yes, it can be. But that's potential on the road. You have to present value that potential. That's all investing is. We don't know the future. We're just making educated assumptions about the future and assigning a probability to that. As mechanical as that might sound, it's a good exercise in terms of understanding how you view a company. That's it. That's all I'm saying. I'm not anti-Tesla. I'm definitely not anti-Elon Musk. I'm anti the investor outlook when they sit there and attach themselves to a story, right? We all attach ourselves to stories. I've done it. NVIDIA is overvalued. Well, stock keeps going up. Does that mean it's not overvalued? I don't know. All I know is I sit there and say, if I'm making an assumption about the future, what does that future have to say? Patrick, thank you very much. I do really believe that. Higher interest rates get rid of bad companies and bad investors. Of course it does.
As long as we let them, right? Unless we bail people out and let them make stupid
Well, that's the
decisions.
problem. Then you have corporate bailouts and corporate welfare and all that stuff.
It's like in the mid-1990s, all these companies started trading derivatives and losing billions of dollars, but they got backstopped. Otherwise, I mean, Procter & Gamble lost $100 million in derivatives in a single year.
Yeah, 100 million is nothing.
Well, for them at that time, they were not near as big.
Really?
Yeah.
Yeah, but then you look at the banks from a year and a half ago, or was it a year ago? How many banks were? Guys, you know how many banks should have failed based on accounting, based on SEC and rules from 15 months ago?
And by the way, nobody cares about that anymore.
Ever at all.
We had some of the biggest bank failures in history, and
yeah,
people just didn't care.
Nobody cares anymore.
No.
Nobody cares. Does anybody remember what Silicon Valley Bank is?
Gotcha, Rob. Thanks for.
Is that true?
So he's saying it's either or. So it's $8,000.
That's what I was saying. Yeah,
or.
That's what I thought it was.
I thought it was $8,000 to have the
No.
capability, and then to maintain the software is $99. I got you.
That would be better.
Yeah, it would be.
Okay. Oh, Hans, I don't think the recognizing FSD revenue is like Enron at all. Enron was, oh boy. Paul, by the title, I assume you're only covering Tesla now. No, I'm covering way more than that. It's just Tesla is in the news a lot. Tesla is in the news a lot.
Red, green, yes. Bonds,
GD
Rs.
stock. Is that General Dynamics?
Yeah.
You want to pull that up, Dalton? Because you used to work in government
Sure.
contracts.
Sure.
Oh,
What-
wow. Tesla's up 13% now.
What question do you have, Billy? Are you just asking for general question? Or do you have something specific that you want to get answered?
Yeah. Meanwhile, bonds are exploding. Yes, they are. And guys, that's what's great. You can get 5.4% on a 90-day treasury right now. Look at the options you have now. You can sit there and say, if I'm not going to get, what's the premium you should have to own a stock? That's the question over the 90-day treasury. The risk-free rate over 90 days. What's your premium? That's the question we have to ask ourselves. That's a question I always sit there and say, if I can get 5.4, and that's what drove stock values up so much for a long time was, I'm getting 0% on 90-day treasuries. Why should I'm fine getting 1.5 or 2% dividend yield in the S&P. Drove values. Now all of a sudden rates are higher and we see stocks at new all-time highs. Who knows what's going to happen, guys? Who knows what's going to happen? But just remember, your job is a dollar cost average. Oh, I love this chart that we started to use.
General Dynamics is down 5%.
Is it?
Mm-hmm.
Guys, here are all the things that have happened. More than this has happened. But this is 1955, start of the Korean War to today. Look at all these things. Actually, they don't even have in here the, what's it called? Silicon Valley Bank. I mean, I look at this going, all these things happen. I truly believe that if you love picking stocks, it should not be the majority of your portfolio unless you have a certain track record about it. I think everybody should be 80% or more of ETFs and pick individual stocks from there. But still on the ETF front, it's still important to understand that this stuff happens. It's still important to be able to understand your emotions and be able to handle those emotions. That is of utmost importance. And you guys, anybody's been with our channel since member 87 back in January of 2020, you've got to remember, follower number 87, you got to remember that my transition as an investor has really changed a lot over time once I understood myself as an investor. Lazy and didn't want to stress. So I gravitated towards bigger companies because I do know that I have the ability to be able to withstand the emotion of seeing a stock go down a lot. In fact, rooting it on. Like Nike's at $95 a share right now. Guess how happy that makes me? It doesn't. Because I bought it at 85, 86, 87, and I was hoping for a lot lower. I would love for Nike to be $45 a share, $40 a share. By the way, I read some guy said today that he thinks the QQQ, which is currently at 430, he thinks it's going to go under 100. Even that's a lot for me to swallow. I don't know where it's going to go, but that seems pretty low. What would that make Microsoft, Apple? I mean, for QQQ to fall 75+%, Microsoft and Apple have to be big drivers of that.
You could probably figure it out with the weighted percentage of the QQQ.
Well, we don't know.
Yeah.
All we know is that for that to happen,
they would get destroyed.
Microsoft had to be at like $80 a share.
That's like yard sale prices.
Also,
yeah.
Billy
And guess
asked,
what? I'd be buying a ton at 225 and as it goes lower.
Billy asked
Nick
kind of an
steals
important
Paul's
question.
car,
Outside of General
buys
Dynamics
Microsoft.
earnings, you asked, is the price drop justified? No one really knows if.
Where was this?
It's up top, right above Nick's comment here. He asked if the price drop was justified, and I think one thing for you guys to note: business performance and what a company does is what you should focus on. It doesn't really matter what the price action is, because a lot of that's just based off of no one knows what these people are pricing into the stock, what their assumptions are. It could be totally different from yours, and trying to guess that, I think, is a really dangerous game to play. So if the business is performing well, which it seems General Dynamics did in the last quarter, why does it matter what people are pricing into it? Who cares if it's justified or not, right?
There's a Ben Graham quote. I'm trying to remember it right now. Don't use the market price as your guide. Use it as your shit. What is the quote? Son of a gun. I got to find this.
Well, that was the whole idea behind Mr. Market, right? Was that
well, that's what I mean.
Pricing as in your favor.
Where is it? Let's see here. Oh, don't let market dictate your actions. Son of a bitch. Hang on a second. Let me find this thing. Because it's a great quote, guys. You gotta. Okay, stock, people invest while enthusiasm, basically, obvious.
Bailey Apple is a cash cow. I mean, it's fallen a little bit, I suppose, but
basically the bottom line is you don't use the market as your guide. Use it as your as your friend. Use it as your way of taking advantage of things. Let the market do what it's going to do, and then you just sit there and say, okay, I think the market's wrong on this. So the emotion has changed, and things like the hardest part to me is when you see a stock falling in an upward market, because then you're like, well, wait a second, has sentiment just shifted on that company? Look at Tesla. Tesla 2.5 years ago was 414. Now it's even with a big day today, it's at 165, 170. What's the market done in the last 2.5 years? Flat or a little bit up? Yeah. You look at that going, okay, well, is there a disconnect? Is the value? The question is, have people just turned on Tesla, or has the market drop, gotten people to turn on Tesla? This is what makes investing hard. This is what makes investing an art and not a science. We sit there and say, we don't know. That's why I love value investing. That's why I like understanding the fundamentals of the business, because then it helps me make an acquisition, and then it also helps me on the emotional side. If I understand the fundamentals and I think that the future is going to hold what it's going to hold, that's why I buy big companies, because I want to sit there and say, all the companies I own that are over $20 billion market cap, I would be floored if they were gone in 10 years. So I look at it just going, if I don't think they're going to be gone, then If I buy them for a good price and their business gets better, I will probably do well. How well? I don't know. I was just telling Dalton that yesterday. I don't know how I'm going to perform in the market. My history, now I look back at my history of doing well before the last 6 years and going, that was a fluke. I just got lucky. I got lucky by being stubborn, right? Yes, I did well, but by the way, I don't know if I'm going to be even better because I have a better process now and better handling of my emotions. But who knows? It is really, really difficult to tell what it's going to do.
Bayo Klein, why? I was looking at PLD that you were talking about. Why is their shares up 50% in the last 5 years? That's not good.
Was there an acquisition that they issued shares to do?
Yeah, that's what I'm kind of trying to figure. I've never looked at this company in my life, so if you can fill in some gaps.
So, Rob, it's interesting you mentioned that. Was driving market last few years is inflation. I don't know if I agree with that. I get what you're saying. If inflation pushes revenue, blah, blah, blah. But you got to remember, with inflation comes higher rates to fight inflation. When you have let's say I always say the extreme. Let's say, for example, interest rates became 15% tomorrow, and you found a company with a potential 12% return. Why would you do that? I'm not saying this is the wrong idea. I'm not saying that. But what I'm saying is if you're the average person who can get 15% in 90-day treasury, why would you buy a company with projected returns of 12%? You would need 18 to 20%. If you need 18 to 20% returns on Microsoft, where would that drive the price down to? Just look at our stock analyzer tool. Just can estimate it. You have to be way lower than it is today. That's the idea of how interest rates work as gravity on the stock market. Has inflation been a part of that? Absolutely. But to me, inflation hasn't. In the long run, look at the 70s. From 1966 to 1982, the S&P went from 110 to 107 or vice versa. So essentially flat. But inflation was rampant. Now, with that point, though, with inflation being rampant, it allowed valuations to plummet because inflation was driving up nominal GDP. So the stock market GDP ratio hit a historical low of 32%. Keep in mind, we're at like 190% right now or whatever it is. So I look at that going, then it can drive that future value of really getting people, if you're in on the right price, the future value can really skyrocket. What were you laughing at, Dalton?
Just the market today. I think the thing that underlies this market and the pricing on the S&P today is the Twain quote, where it's not what you don't know, it's what you know for certain that just ain't so. And people have for a long time have been pricing in rate cut, and I actually think that rates will be flat to up in the next few years more so than being able to be cut.
Yeah. All I know is I have no idea.
Right. Yeah.
And all I know is I want to find good companies at good prices and buy them. Listen, guys, you know me. I was trying to make money off shorting. That was a great lesson learned from me. The markets can be rational longer than I can stay solvent. It's a little bit of exaggeration because there was no solvency issue on my part. But I look at it going, okay, so what did I learn from this? The market's going to do what the market's going to do. That's it. The market's going to do what it's going to do. Like I said yesterday, literally Tim asked, what did they miss on both? He literally said both top and bottom. He said, if they miss on revenue and earnings. I go, oh, it's going to plummet. We were joking about 10% drop. Psych, it did a 10% jump. Now, it could be short covering. It could be a lot of different, I don't know what the reason is, but the point is, it doesn't matter. What matters is it happened and it skyrocketed. Hey, more power to Tesla people out there. More power to them. I have no idea who else reported?
Enphase.
Yeah, Enphase reported.
And Visa reported.
Oh, yeah, Visa reported.
Yep, they were up like 2% or so.
Yeah, they were up, even though they didn't beat on... Did they beat on revenue or did they beat on... I think they missed on one of them. I didn't see which one it was.
Didn't they miss on revenue, beat on EPS, I think?
Oh, yeah, AT&T reported. Their revenue was down 0.5%, but they beat on profit. But AT&T, man, that's a debt-laden business.
Yeah.
A debt-laden business. Yeah, Carlos, all my cash is held in treasuries, 90-day treasuries. That doesn't mean you should do it, but I like it. Oh, wow. Rob doesn't even think rate cuts will even happen next year.
No, I don't think so either.
Wow. No, he doesn't even think they'll happen next year.
Yeah, I don't think they will either.
Wow.
I don't think rates will get cut. I don't think rates will get cut, period.
What's GILD? Is that gold? Guild Pharmaceuticals, is it? Gilead Sciences. Oh, are they? Look at Gilead, all-time high of 125 back in 2015, 9 years ago. I like the fact their free cash flow is greater than their net income on both 1-year and 5-year numbers. That's a great sign. That's a good thing. 15 PE, 11 times free cash flow. Profit margin's up a lot from the average. Oh, look at that gross margin. Boy, look at that 3-year revenue. There's like no revenue growth in this company. Hey, maybe it's cheap enough. I don't know. No revenue growth in this company. I'm really glad we added the 1, 3, and 5, the 3, 5, and 10-year revenue growth numbers on, I mean, look at even the revenue growth potential according to analysts, 2 to 3% a year. Might be cheap enough. They pay a dividend, probably that's a big attraction right here. And look, their 4.5% dividend is easily affordable. $3.8 billion of their 7.5 last year, 8.5 over the last 5 years. Buy back your shares, motherfuckers. Are they buying back shares? Not really. Why wouldn't they? I don't get this. Why would they not buy back shares? Oh, shit. Is today Wednesday? Okay, good. Whew.
Real Nick P22. Paul never cares really about earnings, pretty much.
Yeah, I never care about earnings ever.
I was just talking to him last night at dinner about earnings. He's like, yeah, don't care.
About a company that Dalton's really excited about. And I go, Dalton, I don't care about the earnings. He's like, I do. I'm like, I get it, but I don't.
Like never been excited ever.
And I think
it doesn't affect me one bit.
I think one thing too where
I like making videos for earnings. I really enjoy that.
That's what I love.
I think one thing too where there's like an overlay is the small nano cap companies and the big, like with the companies that you buy mostly, you don't really need to listen to earnings. You never need to read a 10K. You know what I mean? Who cares if you're owning Apple?
But even if you have a small company, if you're buying it but you're relying on those earnings, I'm just like, why own it?
Yeah, I just think sometimes there are more things that you need to be able to monitor and track maybe with a smaller company in terms of management, seeing how things are developing. I don't know.
No, I don't disagree with you there, Dalton.
Yeah.
But I get worried about, do we attach ourselves too much to the short-term event?
Yeah. Oh, that's very true. Yeah. And if you're buying when it's that obvious and there's just underlying trends that are long dated, who cares about the day-to-day, right?
Rob, Tesla's gross margin is better than the major manufacturers, but it's not insanely better that justifies 10x the price to sales ratio. That's all I'm saying. Like, you guys, and Rob, it's not on you. I'm not trying to attack you. I'm just trying to sit there and say, everybody has to understand that I do think Tesla is a better car company than the major manufacturers. I have never denied that, ever. They have a better gross margin. They have, I love the fact that they're not as, but by the way, when will the unions come in? It's just a matter of time. Yeah. Before the unions come in. You're telling me the car manufacturer in the United States of America selling 10 or 15 million cars a year is not going to be taken over by unions? You're out of your mind. You're out of your mind.
I don't even think Rob owns Tesla anymore.
He does not.
Yeah.
I give him credit. He's still defending. I give him credit for that. And I look at it going, it's not you guys got to separate the company from the stock. I'm just looking at saying all the assumptions made. Remember, we're looking at a company that was at 414 and now it's at 165. People perceive this as value. You guys know me. What do I always say? That's not necessarily, it's a great place to start. I love that. Great place to start. Tesla's my favorite. Everyone else got laid off. So it's too soon. Way too soon, Matt. Rob, the funny thing is, you say, well, we agree then. I didn't think we disagreed a ton ever. I just sat there and said, it's not what everybody thinks it is, which is usually the case. That my whole premise in investing, forget about Tesla. Guys, in investing in general, I will sit there and always say to people, things are rarely as good as they think it is, and things are rarely as bad. Forget about investing in life. I live by the mantra, things are never as good as it may seem. Things are never as bad as they may seem. No matter what it is in life, we go through highs and lows every single day, right? I mean, maybe if I'm bipolar, that's why I do that. I don't know. I'm not bipolar, but if I were, we go through ups and downs in life. One day you're having a fabulous day and you can't imagine bad times. Another day you're having a terrible day. You can't imagine it turning around. Guys, we've all been sad and down and depressed. Forget about mental illness and all that stuff. We've all been there. And when you're sad, down, and depressed, you're like, is this going to get better? And we've all been euphorically high going, oh my God, I'm killing it. And you think to yourself, there's no way this is going to change. All I'm sitting there saying in general is, I look at crypto, for example. I don't think crypto in its current state works. I'm not going to lie to you though. The reason I believe that is I see who supports crypto and I just chuckle. And I'm not trying to be a snob. But when I see the people who are fanboys of crypto, I look at them going, I would never take this person seriously unless they were in Austin, Texas at a brewery trying to sell me some beer.
That profile picture was sick.
I showed a profile picture last night at dinner of a guy who's all hyped on crypto. And I'm like, this is the crypto hype machine right here. And it was this ridiculous looking, and that's me being a snob. I get it. But I don't see value investors going like, YOLO on Baba, baby. Like, you know what I mean? Now I see people talking about Baba a lot, but I look at it going, that's what I also want people to see. Oh, well, Baba's up 7% this week. Is it really? Anyhow,
start pumping it.
To me, it's about taking a step back and saying, what has to happen for this hype to be true? And the more the people get excited into the hype, the more I question, okay, is this like a legitimate thing?
Well, and I don't even think it's necessarily being a snob. I really do think that there's
I'm being a snob.
I think that there's a certain type of person, the way they approach investing, that is going to understand like certain types of value and not. Like, it's easy for someone to understand or to justify Bitcoin because it doesn't require a whole lot of intellectual leaps. It's just, hey, Bitcoin's going up. It's awesome. It's a decentralized currency.
But along the way, the story will justify that. Listen, guys, I'm a libertarian. I love the idea of a non-government controlled currency. But I'm also pragmatic and realize that will never fucking happen. The government will never allow a currency to exist without some sort of regulation by them. And if you think for a second that the Fed's going to sit there and go, listen, this crypto here, it's getting rid of our fiat, we're cool with that. It takes one very simple rule. Something I've done to a few of my friends. Banned. The second it's banned, what do you have? I'm not saying that it's going to happen, but I'm saying it's a lot more likely than people probably want to give it credit for. Just like when we were talking 6 or 7 interest rate drops this year, I kept saying, what would have to occur for that to be the case? It would be a recession. It would have to be a pretty bad recession in and of itself, because that's all I'm saying is that when you go to extremes, and by the way, somebody asked if I ever listened to Michael Saylor. I have not.
He's an idiot.
With that said, the snobbery thing I was going to say was I just go on Twitter and see everybody who defends Michael Saylor, and I go, I don't need to listen to Michael Saylor to see those people.
I was going to say, here's where Michael Saylor loses me. When someone makes the assertion, no matter what it is, that they'll never sell something, they're not investing anymore.
Yeah, that's exactly. Listen, and guess who said that, though?
Costco with Munger.
And it drives me nuts.
He's not investing at that point.
It drives me nuts that
really
Costco said, Munger said he would never sell Costco. And I'm like, God, I just can't get around that idea. I don't think anything is unsellable.
Yeah.
I just look at it going, I mean, besides when I say that, like, Paul, you sell your soul. Like, no, I'm not going to do that. Paul, go murder your brother and we'll give you no, that's not going to happen. I mean, like, if you ever make an investment in something, there is a price that makes it where you go, I'm out. Whether that's right or wrong, I think it's about opportunity cost at that point.
Absolutely. I 100% agree.
And that's just the thing. It's like, if you told me, if I was 100% invested and I had a company that was selling for 4 times what I thought it was worth, and I had another opportunity to go buy a company that I thought was selling for half of its worth, I look at that as an 8x difference. I'm buying 8x more of value. I'm going to have to move on. That's the way I view it. Now, if I have extra cash laying around, I can make the other investment and still keep the company I love and let the value go into it, sure. But if I'm all invested, like if the NASDAQ went down 75%, 80%, what are the values you'd be getting on shit?
Insane.
I'd be scared about how I'd have no money and it left it over. So I would have invested it all already.
And it's one of those things where, like, you could own Rockefeller Center, right? This impenetrable piece of property.
Yeah.
If you're really thinking in terms of opportunity costs and the best allocation of your capital, owning that forever does not make sense. Like you said, if the NASDAQ fell 80%, you could take the money from that and make serious gains on buying large companies with the proceeds from that.
I agree.
And that's a better opportunity cost. Apple at 10 times earnings is better than Rockefeller Center owning it today. I really do think that.
Yeah, I do too. What do you think of Evolution AB? I don't even know what Evolution AB is. That's true, RJ. He dead, so technically he told the truth. He would never sell. That's
He
true.
told his kids not to sell.
What's ZTS? ZTS. Zoetis. $70 billion market cap? I've never heard of this company.
Sam Lloyd.
Anti-infective vaccines. For animals. Interesting. Sounds like a boring business I would like.
Sam Lloyd, are you asking for like defense industry or defensive, like they don't move the same with the market? What are you
High
asking?
gross margin. Well, this is interesting. Cash flow statement. Okay. High PE, one thing I don't like is the free cash flow and the net income are pretty far apart. Yeah.
So it looks like they hit a 52-week low 2 days ago.
Well, look at this, guys. This is pretty neat. 5-year PE, 5-year price to free cash flow, the issues. And I don't like the fact that the free cash flow is lower than the earnings. But sounds like a under-the-radar company.
I love the average company that our community suggests to us.
Oh, yeah, they're great.
Like, it's always 52-week low, like interesting.
Yeah, they're interesting, boring businesses. Yeah. I mean, I've never heard of Zoetis. Is this even pronounced correctly? Oh, it was previously Pfizer's animal health unit. Interesting. Well, thanks for the suggestion. I don't like the fact that it's so different from earnings. I haven't looked at Baidu in a long time. I already have enough. I feel like my bet on Baba is enough exposure for China.
Yeah, especially the position size you have in it.
Yeah, I have a full position size. And so when somebody said earlier, am I happy it's up 7%? I guess since I have a full position, I'm happy about that. But it doesn't mean I wouldn't add in the future. If it fell in half.
Opportunity cost, right?
Yeah, if it fell in half, maybe I would.
And like Alibaba, the time that the actual thesis starts to play out, it's probably actually a better place to implement capital at higher prices.
Maybe so.
Right?
Rocket Mike, Uncle Paul, in your opinion, what factors are keeping the market from falling into recession? Thanks for your answer. Well, remember, the market and recession are different things. Recession is an economy thing. The market is a stock market thing. Now, do they work in? Of course, they work in tandem. Like if we have a recession tomorrow, probably going to see a big decline in stocks.
Or not.
we're inflation. I actually feel like inflation is helping. Printing all this money. I mean, there's so many things that get factored in. I don't know what the exact answer is. I mean, the strong job market's still helping big time. The strong job market's really, really helping big time. Billy, thoughts on HPQ? Did we do a video on HPQ or did we cut HPQ out of it? Oh, we cut it. So, no. HPQ is a share buyback kind of play, in my opinion. It's not a growth company. It's, are they going to buy back shares right? Paul, a couple questions. Know about human androids yet? Do you think in 20 years they'll be everyone's home? I hope so. I really hope so. Guys, let me ask you a question. As a business owner, would you rather have robots who can work 24 hours a day without having personnel issues, having emotional issues, calling off sick, etc., or would you rather have a human?
I remember I asked you that question. I was like, do you think in 10 years? You're like, I don't know. Dalton, didn't you see something on Twitter yesterday? Like Elon had said, like in 7 years,
yes,
we're all going to have robots that are like $1,000 a month or something.
Yep.
Crazy.
Yep. I would gladly pay $1,000 a month for a robot to do work for me 24 hours a day.
Clean, cook, I don't know, whatever it does.
Fucks.
Sam Lloyd. I don't believe in playing defense. I believe in playing offense and investing. I don't think of things as defensive investments or cyclicals or anything like that.
How do you value that? It's very...
Yeah. I get what you're asking. I just...
Well, Rob, you can still... By the way, you're right. And to me... that's a harder argument for Tesla as a tech company. Because how do you value that? I have no idea. At least with Tesla, they can say, we're selling it for $99 a month. We expect, you can sit there and say, okay, there's going to be 3% of their cars sold. They're going to buy it. So if they sell 10 million cars, 300,000 a year at $100 a month is $30 million a month, $360 million a year. If I did that math right.
What's that?
So actually, let's do that math real quick. Let's talk about that.
Sounds about right.
What's a reasonable percentage of people who will sign up for the $100 a month? Let's say it's 5%. And let's say in 10 years, they're selling 10 million cars. So every year, 500,000 people are signing up. At $100 a month, that's $500 million a month in revenue. Nope, $50 million a month in revenue. $50 million a month in revenue. And the average Tesla is on the road for 5 years. So let's call it $250 million a month in revenue. Times 12 is still only $3 billion a year in revenue off FSD. Am I doing that math right? 10 million cars, 5% is 500,000, $100 a month is $50 million a month. The average cars are on, let's say, for 5 years on the Tesla platform. That's $250 million a month times 12 is $3 billion a year. Even if it's 50% gross margin, you're still only adding $1.5 billion a year. Okay, make this number 10%. That's still $3 billion a year. Make it 20%. It's still only $6 billion a year to the bottom line. Even at a 20 PE, it's $120 billion in value.
Yeah.
That's where I look at it going, make your rosiest of rosy assumptions. I don't think you're going to have 20% of people who buy a Tesla doing FSD at $100 a month.
And that's I think where the disconnect is.
Maybe there will be.
Some people may make these assumptions and say, okay, well, actually, we're going to get into selling these to other, not just Tesla, not just in-house. And that's fine, but I would never buy a business based off those assumptions. Ever. I couldn't do it.
Yeah, but you've got to put a probability. I do agree that there's a probability to be placed on those things.
But why not just pass?
And that's what Rob is saying. Just pass on that one. And I agree with that. Yeah. Unless if all of a sudden Tesla was $40 tomorrow, what are you doing?
Well, and I would only value it based off the cars it sells.
You have to put some value to the FSD portion.
So, perfect example. When Meta fell to $88, I valued the company, and I didn't even get through the whole valuation. I valued the Facebook Blue app, and it was worth $175 a share. I didn't have to go any further because I get everything else for free, and I got a 50% discount on Facebook Blue. So why go?
I remember you saying that, right? Rob. I'm sitting there saying new owner pays too, but they're not required to. I'm saying how long will the average person have that software? Maybe 5 years? I don't know. Rob, your guess is as good as mine. Call it 10 years, but I don't think it's going to be 10 years. The average car, I think what's the average car age in this country? 12 years.
Yeah, something like that.
I think it's 12 years. You're telling me that when somebody's selling a Tesla for $8,000, that somebody's going to sign up for the $100 a month FSD? No chance. No chance. The person buying a car for $8,000 isn't doing $100 per month. And by the way, don't forget, at some point, Tesla will probably be like Apple saying, we're not doing FSD on that car anymore. You got to buy a new car. So I don't think 5 years is a very reasonable assumption.
The average age of a car in the U.S. as of 2023 was 13 years.
Okay, I said 12. Shame on me.
Yeah. And all light vehicles are 12. The cars are 13.
Sorry, guys. Rob, I know, I get it. You can sit there and argue with me about 5 years, but I look at it going, we have software here. We sell software. I know the software game a lot. I look at it going, okay, it's not what people think. People think the software is like, oh, people buy software and they keep it forever. No, it doesn't happen. Such you change cars here and there. Is there a market for Tesla to go out to other car companies and say, listen, we've mastered this? But you know who else could do that? Google. Well, I guess they got out of that thing, didn't they?
Waymo.
No, self-driving.
Waymo. I think they sold off Waymo, didn't they?
I don't remember.
Maybe. And Apple said, we can't stomach the CapEx, so we're out.
Yeah, Apple, generating $100 billion a year in cash flow, says, yeah, we don't like this.
And that's the thing I think that's interesting about Tesla, though, to its credit, is you kind of have a marrying of, like, good software and a car company. Whereas a lot of the really good software businesses would never touch this. Mm-hmm. They couldn't do it. They can't stomach it.
Are there still value plays in this overpriced market?
Yes.
I think so. You might have to dig deeper, but there are. Listen, the big mistake I made 5-6 years ago was saying, oh, the market's overpriced, therefore everything's overpriced. Big mistake. Because I was used to a market in which I could find value at any turn. Now, is it hard? Yeah, it's harder, of course. But if anybody thinks that the most sought after, hyped companies are the most undervalued or are undervalued, that's hard. Like the Magnificent Seven, Google's the only one where I sit there and say, I can see that there's value in Google at this price. I can see the justification for saying this is a more value play than the market. Oh, well, actually, a lot more than the market. I think Google still, being a top Magnificent Seven stock has a lot of potential there.
Good point, Aaron. If I spent $75,000 on a car, I'd want to drive it too.
By the way, I wouldn't. I actually disagree with Aaron and you.
Really?
Fuck no. I don't want to drive.
No.
Fuck, I hate driving. I don't hate driving, but I'm like, listen, I want to be able to sit there and go, take me to my location, and I sit back and I check my emails. I do other things. I take a nap. I want to be able to take a nap and not worry about it. That's so funny. Everybody, like, people hear me talk about investment and say, Paul must hate that company. No. I want nothing more than Tesla to change the world on self-driving. I think they've already changed the world on cars, but that doesn't make it a good investment. I think Ferrari is the most beautiful car company in the world. If I'm not going to pay $1 billion for a Ferrari, even if I had $1 billion, there's still a price to be paid for everything that's good. That's all I'm saying.
Friend of the channel, Guy Spear, just sold 25% of his Ferrari stock.
Did he sell it?
For the
25%?
First change in his portfolio since Q3 of 2022.
Rich people with Bentley and matches? What's matches? Don't want to drive. Yeah, I don't want to drive.
Bentleys are so sick.
Oh, listen, there have been deaths for sure on, and guys, there's going to be more. Oh, Maybachs. I was like, did he mean Maybachs?
Maybachs.
Uber already exists, Paul. You know what, Steven? You know what the problem with Uber is? Having the driver. I just go, oh, do I have to talk to this person? I know you can select, be quiet, and all that stuff, but it's just, plus, you don't know what you're getting. You sit there and sign up for Uber X, and sometimes you get a shitty car, and I'm like, well, what is going on here?
Yeah.
Like, this sucks.
What do you guys think of the G-Wagons? You think those are nice?
Love the G-Wagon. They're coming up with an all-electric version.
Oh, really?
Yeah,
You
they
think
just
that'll
announced
tank?
it.
Have you seen how bad the Ford Maverick sales have been, by the way?
No.
But here's the thing for me. Here's my question. Maybe you disagree. That is the dumbest idea ever. The people who buy a truck don't want an EV. You don't understand your in market. It's like when they did the advertising for Bud Light.
I disagree with you in the sense of this. Maybe right now, I just think the world's becoming, let's say, we talked about it the other day, we talked about like all these car enthusiasts, like, no, I got to have a combustion engine. I'm like, grow the fuck up.
Yeah.
Like, it's so much faster to be an electric vehicle. Like, who cares if it has an engine or not?
Yeah. I just feel like it's the I don't know. It's just your in market. And whether or not it's rational or not, the people want big, lifted, IGC, ICE trucks.
Oh, there we go. We got a troll.
Who?
This moron has shorted NVIDIA. We got a troll. Yeah, I fucked up. I shorted NVIDIA. Welcome. Sounds good.
Oh, good Lord.
Oh, hey, next year, I've talked about that to be funny, about becoming an Uber driver. You don't like the design? UA Sneaker Florida doesn't like the G-Wagon design? I love the G-Wagon design.
I think G-Wagons are pretty sweet.
I had one back 20 years ago, 18, 19 years ago, but it drove like a tank. And I got like sick all the time doing it.
I could not buy it. I wouldn't buy it. It's not my car to buy, but they are pretty sweet looking.
EV truck will work when battery is good enough. Ford sucks, not even close. So, Rob, correct me if I'm wrong. I think does Ford have an EV truck that's generating 400 miles to a charge?
If they do, it's the Maverick. That's their only EV truck they have.
Interesting.
Let me look at the range on it.
Yeah. Gary, you're probably right.
That's actually what's crazy. Lucid, as much fun as we make of that.
Oh, it's a beautiful car.
And they also have incredible range.
By the way, I don't make fun of Lucid.
Oh, I do.
Lucid's fucking beautiful car. Are you kidding?
Range it says here is 495.
For what?
Wait, this has got to be the gas. Okay, that's gas. Ford Maverick specs. The gas engine. Where is the electric? How many miles?
No, you're right, TC. You're 100%. You're 100% right, TC. Everybody to each their own. All I'm saying is that electric vehicles are here to stay. Do I think they're going to be what everybody thought they're going to be? No. I think we're still going to have combustion engine cars for a long time. Could there be a hybrid component? Yeah, hybrid makes a lot of sense. I just don't, listen, I have an electric car. I freaking love it. I actually prefer it to driving a combustion. That's my personal preference. And you're 100% right on that.
So, David, are you?
Oh, he said, so Marco's saying Maverick is a hybrid.
Yeah. Yeah. And that gets 511, the Maverick. hybrid.
With the hybrid,
yeah,
though.
with the hybrid, yeah.
Listen, what's wrong with hybrid?
I drive a hybrid. The
is that what you have?
Yeah,
Here's the hybrid?
That's a hybrid, yeah. I get incredible gas.
What do you get?
On the highway, I get like almost 40.
Oh, I would have thought higher than that.
And then, no, actually, well, maybe it's closer to 50, actually. Let me look it up.
Huh.
What does the 2024 hybrid?
Interesting. The Ford Lightning is the EV, yeah. Oh, why'd you guys hide him?
50 mpg.
I don't think he's distracting. Like, I just look at it. By the way, it's fine. But guys, I listen, to his point, I make videos on YouTube.
Oh, yeah.
I'm exposing myself to the world. I'm fine with that. I've owned up that I lost millions of dollars on Tesla and QQQ short. Well, I love when he says, like, oh, you didn't. I'm like, yeah, I do do that. I fully acknowledge it. I don't care. And by the way, but another criticism of mine, he bought Meta and sold too soon. Yeah, but the point is I was buying Meta when everybody said it was a dead company. That's the thing.
Wait.
Yeah.
When Kramer was on TV apologizing and saying,
yeah.
I was wrong on Meta.
Yeah.
I'm sorry. This management team misled me or whatever he said.
Yeah.
Yeah, that was the time.
David, are you in the community? If so, at me, and we can go over the Tidewater thesis there. I don't want to bore people to death. Most people probably don't want to get into the weeds.
Oh, wow. The Sienna gets 45 miles to the gallon. I'm surprised. That's a big car. Hey, Nextunes, I don't blame you. That's really smart of you. And by the way, Nextunes, I would also consider QQQ when prices come down. I actually believe in tech because tech moves so fast and so quick and it changes so much. I look at it going, if you want to get exposure to tech without having to sit there and pick individual companies, QQQ at reasonable prices, I think should be added to everybody's ETF portfolio. I really, truly believe that. I think it's great. I don't drive. By the way, Rob, you're so funny. I don't drive it for the environment. Oh, so then this is a great story. I was on Instagram the other day, and some guy back in 1990 paid United Airlines $290,000 for a lifetime pass. Yeah. It gave him free flights, first class, for the rest of his life, and he's used $1.9 million net. So he spent about $2.2 million, and people are like, "This is the best investment ever." Well, you do the math; it's actually like a 6% return. The S&P would have crushed that. But all the comments weren't about that. Okay. I was like the only one who commented on that. You know what everybody's comment was?
The environment.
Yeah, this guy's carbon footprint's insane. This guy should be killed. Because you have this like, oh my God. Like, really? That plane was only flying because of him? Give me a break.
Yeah, David, I would be happy to go through it with you if you ever decide to do like a free trial or something. Just at me in there, and we can go through the whole thing. I can answer any questions you have. But
well, Rob, you bring up a good point here. Like I said about Greta Thunberg, whatever her name is, AOC, they were sitting there and saying the world's going to end in 10 years. It's like, it's not. Does that mean that we don't have some sort of environmental issue? I'm not going to, listen, that's not the conversation. My whole point is when people make these extremist comments of the world's going to end in 12 years, or we're at a point in 5 years where we can't turn back. Come on, give me a break.
Or the other way, there's no issues at all.
Yeah, or there's no issues. Like, oh, debt levels are fine. We've been fine so far. It's like, well, no, that's not true. You can't be this like blinded to the fact that like there's a lot of great evidence of global warming. There's not a lot of great evidence that the world's going to end in 10 years. Is it alarmist to get reaction? Probably.
Yeah, I think I saw someone made a post like over the last 20 years, like the coast really hasn't changed much, like water levels wise. But do we pollute the hell out of our world? Yeah, we do.
There's also a lot of money to be made in this.
In Cleveland, Ohio, do we like global warming?
100%.
Absolutely.
Biggest advocates of global warming that ever existed. Our winters have been better and better for the last 10 years. Like, give us global warming.
I also read that even if we stopped CO2 emissions tomorrow, that the sea levels would still rise for the next 1,000 years. Sea levels would still, there are certain things that the environment
Yeah, but that's not the issue. The issue is it faster because of this?
Sure.
That's the question.
Sure.
Gary, I love your question. How did you know stocks was something you were patient about? What made you realize, love what you do? When I had hell. When I went through hell, not understanding what I was buying and being scared when stocks went down. That's when I realized there's got to be another way. And then I found Warren Buffett and it started to click. And don't get me wrong, it still took a while. And that is exactly why we had the community, because it was just so hard to do it on your own. I always joke and say, It took me a decade to do it on my own to get to the right emotional point. If I had a community like this, it probably would take me a year or two. And I truly, truly believe that. That was a big reason why we created the community. I was like, I can literally cut off 90% of the time just by doing this. Because it was all on my own. I remember sitting in my room one time during the tech bubble crash going, stocks are going to zero. Guys, I believed the entire stock market was going to zero. I believed that. Fast forward 8-9 years from there, and I was the happiest guy in the world when stocks were falling. Bank of America would call me. Merrill Lynch would call me saying, you're the only good call we have. You speak so positively. But that's a great question. That's a great question. It was just like something that just happened over time. I just sat there and said, there's got to be a different way. And it made sense to me. I remember one time hearing Warren Buffett say, when hamburgers go on sale, the Buffett household is very excited. And I was just like, yeah, what's the difference between that and stocks? Now, the difference was making the connection between buying a piece of a business. I didn't understand that statement. I mean, I understood it, but I didn't embrace that statement until later on in life. I didn't embrace the statement that you're buying a piece of a business. Then I started to make the analogy of like, well, wait a second. I've bought a business before. And I didn't care what the price was on a day-to-day basis. All I cared about was, are they driving revenue and profit? Because if they do, 10 years from now, it'll be worth more money. And I was just like, oh, that's what stocks are. Don't get me wrong, guys. It's still hard at times to see a stock go down. It still is hard. David, we're gonna do that for the community soon. We're gonna do that for the community soon. For our community, we're gonna have Dalton be more active on deeper dives because Dalton's a much more thorough researcher and investor than I am. I do sometimes have to put Dalton on the brakes and be like, Dalton, does that really matter? Dalton's like, Paul, the CEO stool sample just came back and it was positive for ringworm.
Hey,
I'm like,
don't ask about
okay.
airline miles.
No, that's true. I'm like, Dalton, does that really matter?
I think it has been nice though. I think that I've focused more on things that, because like knowing you and knowing what you look for when I pitch you stuff, it's like I know what not to say now because some things just don't matter to you.
Well, the other thing is I like to start. So it's funny. We talk about bottoms up approach, but when it comes to an individual stock, top down, like give me the high level numbers. If this doesn't make sense, why would I go to the next levels?
Yeah.
It doesn't matter. Like to me, it's just all about peeling back layers. There are, this many layers when buying a company, whatever. I'm being hypothetical. If I start at the top and this is already an X, I just saved myself a lot of time, right? Remember my beef with Tattooed Chef and Meet Kevin 2 years ago? Not Meet Kevin, Jeremy from Financial Education. Yeah. He was like, you got to understand the company and all these things. I'm like, no, you start at a very high level. Okay, what does the future look like for this company? And is it justified today's price? If the answer is no, then I'm out. Now you have to understand the future of the company too. Then here to me, the last part is management.
It's also not evident to me that Jeremy knows how to assess.
No, Jeremy's an idiot.
Good or not?
No, of course not. But Jeremy's an idiot. But remember, we all buy into stories, and stories make us feel good. When we tell a story about why a company is great, it makes us feel good. Well, you're right, Rob. Don't get me wrong. That's absolutely true. The top could be misleading. I'm okay with that. I'm okay missing out on those kind of things. At some point, every investor has to draw the line somewhere because if you go down the rabbit hole and 10% of let's say there's all these levels and out of 100 stocks that hit an X here, 10 of them are still good deals. I'm fine with that. I'm absolutely fine with that. It's about you understanding what kind of company you want to own. That top level is what matters to you. Your top level could be very different than my top level. My top level is stock analyzer tool. That's where I go first. And I make low assumptions and high assumptions. And if it falls somewhere in there, I go further. My top level for me is value is the discounted cash flow model. Is that right or wrong? I don't know. But it works for me. And what matters to every investor out there is you got to buy companies that work for you. We have 1 minute left.
A good process by definition will eliminate good ideas.
Yes. You will have good ideas eliminated. Guys, click the link, join the community, $7 for 7 days. We are having a wait list soon. We are going to have a wait list soon. And every day in the last week, our wait list would have been hit. So just go sign up now before the wait list starts. When's the wait list going to start? May 1st?
Yeah, real soon.
Yeah.
And while you're parked on this channel, if you're not subscribed,
You got to subscribe.
make sure you subscribe, ring the bell, because I don't know the exact time it's going to be out, but we're doing a meta reaction today,
Anybody who says
as
Tiger
well as
isn't the
Chipotle,
GOAT
and that's going to be
is a
out
loser.
tonight.
Tiger is the GOAT. He may be
Whoever
the-
says Tiger is not the GOAT
yeah.
is a moron.
Yeah.
The Tiger GOAT conversation, I get the LeBron and Jordan one. That's a tough conversation. The Tiger conversation,
Not even close.
not even
He
close.
may be the most dominant athlete of any sport ever.
Yeah.
Maybe only second to like Phelps in swimming. Maybe. And that's even.
Yeah, that's a good
probably-
point.
Probably not true.
Where did Phelps go to college?
I don't know.
University of Michigan. Where did Tom Brady go to college? University of Michigan. Where did Derek Jeter go to college?
Charlie
University of
Munger
Michigan.
go?
What was that?
Where'd Charlie Munger go?
Where did Charlie Munger go to college? But he didn't
Caltech.
finish there. He didn't finish
He
there.
went to Caltech.
He went to Michigan for 3 years.
Yeah, but then he went to Caltech.
I know,
after
but
that.
that's what I'm saying. He didn't
Oh,
finish at
yeah,
Michigan.
yeah.
All right, guys. Thanks for. Oh my God, Aaron's an $8 a month. Oh my Lord.
Aaron, you're the man.
All right, guys. Take care.
See you guys.
Thank you.